The Bank of Japan is expected to forecast next week that inflation will remain below its 2% target through the fiscal year ending March 2022, the sources said, suggesting it will continue its massive stimulus program for the foreseeable future. The forecast highlights the central bank's dilemma. Low inflation has forced it to maintain ultra-loose policy despite years of pressure from near-zero interest rates. In its quarterly forecast, due out next week, the BOJ is likely to slightly lower its growth and inflation forecasts for the fiscal year ending March 2020 due to the adverse effects of slower growth abroad, people familiar with the matter said. The BOJ will also release for the first time its inflation forecast for fiscal 2021, which is expected to rise above 1.5% but below 2%, the sources said on condition of anonymity. With the 2% inflation target still looking out of reach and signs of slowing global growth mounting, the BOJ, along with other major central banks, will be forced to delay plans to end crisis-style policies. At its two-day meeting, which ends on Thursday, April 25, the BOJ is widely expected to maintain its pledge to issue forward guidance on short-term interest rates at -0.1% and long-term bond yields near zero under a policy known as yield curve control (YCC). The BOJ is also expected to stick to its view that the economy will emerge from a period of weakness and return to moderate growth in the second half of 2019, they said. Based on forecasts released in January, the BOJ expects core consumer price inflation to hit 1.1% this fiscal year and climb to 1.5% next. It also forecast growth of 0.9% this fiscal year and 1.0% next. The Bank of Japan is in a tough spot. Years of printing money have not pushed inflation to 2% and there is little ammunition left in the toolkit to fight the next recession. What's more, an aging population and a flight of borrowers to big cities have led to declining profits for regional banks, which have been made worse by a long period of easing. Nearly 60% of local banks could face net losses in 10 years if corporate lending continues to decline at the current rate, the Bank of Japan's semi-annual financial system report said on Wednesday. For the first time in 2 decades, the central bank said financial institutions were at risk of overextending property loans.